Escalating global conflicts, shaky supply chains, an unstable power grid. Millions of Americans are taking action now instead of waiting for the next crisis. That's why My Patriot Supply is offering an exclusive deal on their best-selling 3-month emergency food kit. This kit provides over 2,000 calories a day for 3 months, with breakfast, lunch, dinner, snacks, and drinks included. It's packaged right here in the USA, packed in sturdy, stackable tubs, and lasts up to 25 years in storage. And it ships fast and free, so you can be prepared within days. But the exclusive offer ends soon, so head to mypatriotsupply.com/radio and take advantage while it's still available. Whether it's a long-term crisis or a short-term disruption, food security equals peace of mind. Head over to mypatriotsupply.com/radio. Again, that's mypatriotsupply.com/radio and grab your 3-month emergency food kit today.
You're tuned in to Money Matters Boston, 1120 a.m. This is the Money Matters Radio Network, WBNW 1120 a.m. and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and as we kick things off on a busy day of economic data, we'll get to some of that in just a little bit. Our top story that we're going to discuss kind of at the start here continues to be the focus on Jay Powell and the Fed, given all of the hullabaloo during the 11 a.m. hour yesterday, where we went from, hey, the president talked to a group of Republican lawmakers about, maybe firing Jay Powell, to the president showed me the letter indicating he was going to fire Jay Powell, to I'm not going to fire Jay Powell, all in the span of about a half hour, which had markets really disjointed, quite honestly. I mean, at one point, I think it was maybe around 11:30 or so, the S&P had fallen about 0.2%, so stocks actually didn't move too much. The bigger moves were happening in bonds, where the long end of the yield curve sold off almost 10 basis points in a span of 20 minutes, which is a sizable move for a full day, let alone 20 minutes. At the same time, the dollar index sold off about 0.9% in the same period of time. Gold rallied over 1.25%, and then all of that subsequently reversed within 40 minutes later. So,
to give a sense for the size of those types of shifts, I think back during Liberation Day, when that fiasco was going on, bonds were moving something like 20 basis points, and that was the thing that caused the Trump administration to primarily pull back from all of that. So to see a 10 basis point move in long-term debt in a 20-minute time period is very significant.
Yeah, I mean, a 1%, to put things in perspective, when we look at the U.S. dollar index, a normal move for a day is anywhere between 0.1% and 0.25%. Like that's kind of normal. And this was almost a 1% move in 20 minutes.
Yeah.
So things were getting edgy, and it suggests that, hey, if you were to see a firing of Jay Powell, things could get rather dodgy. And this brings us to this piece from Nick Timmeros and Brian Schwartz from the Wall Street Journal. Nick Timros, and the reason that I mentioned who wrote it is Nick's a Jay Powell groupie. And what I mean by that is not that, he's, unanimously portraying, a flattering portrait of Jay Powell, but what Powell wants to get across comes through in Timros's articles. Is that a fair way of saying it?
Yeah, mouthpiece of the Fed, however you want to describe it, he's been described as such.
So, you get this piece, and it's titled The Fed Building Renovation at the Heart of Trump's Efforts to Oust Powell. And basically what it talks about is, look, you had this renovation of the Federal Reserve Building, which was, built in the 1930s, and it basically lays out, look, it was supposed to cost, less than $2 billion. Now the cost has ballooned to $2.5 billion, and basically goes through the Trump administration is trying to say that this is fraud and reason potentially for a for-cause firing, and the Fed obviously and Jay Powell are saying, like, no, this is just, kind of how construction costs have gone since we proposed it and where things are now, and, there's a bunch of asbestos in here, and, blah, 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 and this and that. Ultimately, here's my read on the whole situation. Is the Federal Reserve is a self-funded institution. It does not receive any appropriations from Congress. It does not receive taxpayer funds from Congress. You can make the case that, some of its income comes through sources that ultimately may be derived from federal borrowing, but ultimately it's not something where the Fed has any kind of say in how much it receives from the federal government. It operates based on its own balance sheet and income statement and so on.
They also charge banks fees, so pass through to consumers exists there too. And look, anytime any organization is being accused of waste, fraud, or abuse, then they should be looked at critically. But it is an important distinction that this is not, the Social Security Administration.
Correct. So here's what I do. Let me start with what I don't know. I have no idea if there's any waste in the Fed's construction rebuilding project. There probably is, quite honestly.
I'll tell you,
okay?
I'm redoing my pool right now, and there's a
fair
bit of waste. There's no fraud or abuse as far as I know, but there's a fair bit of waste. Doing things that I don't need to do.
Correct. Yeah. I'm sure there is. Or it's, we were going to do like this in this room, but not... Fine, whatever, just do it. We want to get it done. Okay, yeah. I get it. So, is there probably some waste in there? Yeah, I bet there is. I'm willing to say that. Is there fraud in there? Well, fraud is like telling people you're going to do one thing and then doing something different. I don't have any evidence of that, so I'm not going to say there's any fraud in there. If someone brings me concrete evidence and says, yes, like here's the fraud that happened, okay, I'll take a look at it, but I don't think we have any evidence of any fraud at this point. Fair?
I think so.
I haven't seen anything.
There's no evidence of any fraud. You're right.
If something comes out, fine, I'll look at it. But to this point, I think you can make the case, there's probably some wasteful spending in there. Is there any fraud? Okay, I have no evidence that points in that direction. Is the project over budget? Yeah. But talk to anyone who's done a construction project in the last 3 years, and they'll tell you, came in over budget and took longer than expected. Am I wrong?
Honestly, if you're $500 million over budget, that sounds like a lot. When it's on a $2 billion budget to start with, it's a lot, but it's not.
A 25% cost overrun is not crazy in today's environment. It's not.
Yeah.
So look, is a $2.5 billion renovation of the Fed distasteful? Yeah, I think you can make a case for that. Even
sure.
It's not necessary in the broadest, terms out there, and especially at a time when, a lot of folks in America are still struggling to see, the Federal Reserve doing a $2.5 billion project. Could you make the case it's kind of distasteful?
It's kind of
I think so.
It draws a lot of comparisons to me to the fact that the White House hasn't been updated in decades, and every president that's been there,
right, they do just fine.
Complains about but they do complain about how it's falling apart. But no president wants to be responsible for orchestrating a $2 billion renovation of the White House.
No, because they know better. they know better. It's bad PR.
Yeah.
Do you get to fire the Fed president for bad PR and, wasteful spending that's not on taxpayers' dimes? I don't really know.
Yeah.
But actually, no, I do. No, you don't.
Well,
No, Michael.
Depends what you mean by get to, because we might be testing that theory pretty soon.
Should one fire the Fed chair?
Better question, no.
Correct. Okay. And this is not to, make me out to be like some kind of Jay Powell apologist. Again, like you can pull the tape on our shows from or whatever the audio is stored on these days. You can pull from 2021, 22, and even the first half of 23, and we were like, man, these guys not doing a good job. This is not what you want to see from the Fed. So it's not to say that the Fed is always right. They're often wrong. As recently as a couple of years ago, they were wrong for an extended period of time. But it is to say that, in my opinion, this whole thing about the Fed building renovation being, something that is a problem that would, potentially be reason to fire Jay Powell. Man, if you want to fire Jay Powell, just try to fire Jay Powell. The building is not something there's no there based on what we've seen to this point.
So we got to take a break, Chuck. When we do come back, I think it's important for us to spend a fair bit of time on why this matters so much, why bond markets freaked out, why bank CEOs are writing letters. Because quite honestly, if any other leader of pretty much any division of a branch of the federal government was doing something like this, there wouldn't be the same. There would be some protests, there would be some frustration, but there isn't the same regard given to those different government or quasi-government agencies as is given to the Fed, and I think we need to explain why that is. So let's take a quick break and let's talk a little bit about the history there and why this matters so much to anyone in the financial services industry. Quick break, we'll be back after this.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Artificial intelligence is having a profound effect on daily business. Its reach and result is significant and will likely only continue to grow, and that may present an incredible opportunity to include in a financial plan for the future. Hi, this is Chuck Zodda from the Armstrong Advisory Group. AI's technologies could be described as groundbreaking, and that's why we've written a new guide this month called AI in Your Financial Plan. Understanding how AI works may offer you insight and information about how to craft a plan that you haven't yet thought of, but it's not without risk. Call the Armstrong Advisory Group right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001. You can also request this guide online by visiting ArmstrongAdvisory.com. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
See you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Mike, last segment we were talking a little bit about the piece from the Wall Street Journal about this Federal Reserve building renovation that is getting more news than it probably deserves. And you mentioned at the end of the segment, look, let's talk a little bit about why. What's the best way to phrase this, Mike? Kind of why
threatening the independence of the Fed matters.
Yeah, let's talk about that.
I mean, that's really what we want to get at, because I do think that this situation would be a fair bit different if we were talking about a $2 billion renovation at Department of Energy or the Social Security Administration or some other agency or group in the government. So we talked a little bit about it on Tuesday, Chuck, of other nations outside the United States where there has not been a central bank that's truly independent of the executive branch of the government. Brazil, Turkey, other countries like that. Let's actually start in the United States, because we actually do have a history here of, yes, Federal Reserve and central bank independence, but moments in history where it didn't exactly function the way it was supposed to. And so the Journal's got a piece about this today. You can check it out yourselves. But what history really tells us about all this. And so in the 1960s, President Lyndon Johnson wanted lower rates, as most presidents do. In particular, he was trying to push through a whole bunch of spending. He was quoted as saying that a rate increase would amount to squeezing blood from the American working man in the interests of Wall Street. Nonetheless, the central bank president at the time pushed forward with a rate increase. He got chewed out by the president at the time, and things moved on. The 1970s was the period that most historians and economists look at for that real period of a somewhat, would you call it a full failure of central bank independence? I'm not sure I can go that far, but some degree of failure when it came to the central bank's independence and Arthur Burns. Do you want to take that for a minute, Chuck?
Yeah, I mean, I don't even know if it's a failure in central bank independence. So, I would make the case it was just, hey, they executed bad policy pretty consistently.
Yeah.
Some of that you can make the case is because of pressure from President Nixon to keep rates low prior to the 72 election. But again,
some of it was just bad policy.
Correct. And this is when you had the central bank saying, well, if you exclude X, Y, and Z from inflation, it's not actually that bad. And you got to the point where you're like, okay, so you're including like the price of water bottles in inflation and nothing else. What are we really measuring here?
Right.
So I think that, that certainly is something where you can, make a case that some of it was because of the lack of, some of it was because of pressure from the president. But look, I'll make the case that every president in history since the Fed was created has wanted interest rates to be lower.
Yeah, I'll generally agree there.
Are there any that have, been out there and said, please raise the cost of borrowing so that it's more expensive for the country and its constituents to borrow?
No, I don't think there have been many
No.
that have done that.
And this specifically gets at why central bank independence is important, is because every politician, when push comes to shove, would prefer for borrowing to be cheaper. If you want evidence of this, by the way, look no further than the last 25 years, when repeatedly forced to make difficult decisions on different items, whether Social Security or budget bills or, specific policy bills and this and that, the decision on all of them has basically been, do whatever makes the most sense for me politically in the upcoming election. And this is why we currently have a Social Security program that now has, 7 years until it potentially sees 20+% benefit cuts. We have annual budget deficits that are running north of 6% on an annual basis. And it's mostly because politicians, when faced with those tough decisions, unfortunately in the last 25 years in particular, have decided over and over to do the easy thing instead of the challenging thing. And the idea behind central bank independence is not that the central bank is always going to be right. They are human. They are not robots. And even robots, as we've seen from ChatGPT and the like, they're not always right either. Sometimes they tell you to go eat a rock because it's nutritious. So I think that ultimately the idea behind central bank independence is, hey, if you appoint people to these boards, you want them to be eminently qualified because this is something that's really important. And to this point, I don't think there's been any question as to the broad qualifications of the people at the Fed. And ultimately, you want to have them in a position where they are not subject to the whims of removal if they don't conduct policy the exact way that the president wants them to conduct it. And this is important not because of any one president, but I say this over and over. Imagine that the least qualified person economically comes into office in 2028. It is someone who grew up, I don't know, the only thing that they've ever known is whatever. They're just really unqualified. But each of you can imagine the person who you would least like to see running the economy. Now imagine that person gets to set interest rates. Do you think that's a good idea?
Well, and specifically why would be because artificially low borrowing costs prompt more inflation. And so prompts investors in bonds to say, well, if there is a risk of higher inflation, and if I lend the United States government $20 billion over the next 10 years, and I'm genuinely concerned that the 4% interest rate or so that I get on it is not going to pay for the amount of inflation that I'm going to see over the next decade and that devaluation of the dollar and all the problems that would come with it, then what am I going to do? I'm not going to buy the bond. I'm going to demand a higher interest rate.
And play out the string on this, because here's the way that I look at it. Let's say that you get a Fed that's completely co-opted by a president.
Sure.
They decide to lower interest rates to 1% in the short term. The long end of the curve blows out to the top side because people say, okay, this is going to spur inflation. The Fed then responds by saying, great, we're going to engage in what's called yield curve control, basically targeting interest rates along the entire yield curve and buying bonds if needed. So they say, okay, we're going to take that 10-year Treasury down to, 3%. By the way, this is what the Fed did during World War II and the immediate aftermath, basically through like the first part of the Korean War. And what you saw was inflation. By the time they finally stopped doing it in 1951, inflation was 21%. Now, you say, okay, so they've great, but they kept government borrowing costs down. That's good, and it probably means cheaper mortgages, right? Well, what, you're going to set the rate for 30-year fixed-rate mortgages. Now are we just doing a top-down based economy where you get the president and the Fed setting what interest rates are across the board? We think this is a good idea?
That's Argentina.
Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's choppy ride due to uncertainty around the potential firing of Fed Chairman Jerome Powell, markets today are in positive territory with more second quarter earnings streaming in. Wall Street's also digesting June retail sales data posted earlier this morning, which rose 0.6% last month, higher than forecasts of 0.1%. Right now, the Dow is up by 1/10% or 69 points. S&P 500 is up 1/4% higher or 15 points. NASDAQ is up 0.5% or 102 points. Russell 2000 is up nearly 1% higher or 21 points. 10-year Treasury yield down 1 basis point at 4.437%. And crude oil is up 0.6%, trading at $66.77 a barrel. Big news from Uber this morning after the ride-hailing company announced a partnership with EV maker Lucid and self-driving tech startup Nuro to launch more than 20,000 robo-taxis over the next 6 years. As part of the deal, Uber will invest $300 million in Lucid. Lucid stock is surging 26% on that news, while Uber stock is off over 0.5%. Meanwhile, shares in high fructose syrup producer Archer Daniels Midland are sinking 2% after President Trump yesterday announced that he had persuaded Coca-Cola to use real cane sugar in its drinks in the U.S. Coke stock, by the way, is up nearly 1%. Sticking with the beverage space, where Pepsi posted better than expected second quarter earnings and revenue this morning, despite weaker demand for its food and drinks in North America. Pepsi also reiterated its full-year outlook, sending that stock up over 6%. Elsewhere, GE Aerospace raised its annual earnings outlook after the aircraft engine maker posted sales and profit that beat expectations. That stock is actually down by 1%. United Airlines posted better than expected adjusted quarterly earnings, but its annual outlook disappointed. Shares are up 2%. And after today's closing bell, all eyes will turn to anticipated earnings from streaming giant Netflix. I'm Tucker Silva, and that is Wall Street Watch.
Mike, we got a whole bunch of economic data this morning. It's actually not a whole bunch. It's 2 reports. But they're still really interesting reports to look at.
You're not going to talk about the Philly Fed manufacturing survey, Chuck?
I'll actually talk about that. The Philly Fed manufacturing survey, I put it matters. Like it's interesting to see what they say. And what we did see was some meaningful improvement from the last couple of months here, but also potentially a concerning note. So here's the good stuff that we saw in Philly Fed. The employment index bounced back from a minus 9.8 to a positive 10.3, indicating more manufacturers in the Philly Fed region are hiring now compared to where they were in June. New orders also improved from 2.3 up to 18.4. So you've got good news on both of those fronts. The bad news is that the Philly Fed prices paid index went from 41.4 up to 58.8, suggesting that manufacturers are broadly seeing increased pricing pressures on what they are using. So there's good news, bad news, but I think overall, really, I think the good news probably overwhelms the bad news at the current moment for the Philly Fed manufacturing index.
I think you have to kind of say the same thing about most of the other reports that we are going to get to here. But let's jump to the jobless claims then next, if you don't mind.
Yeah, jobless claims. Really good news on this front as well. So we saw a continued decline in weekly jobless claims, going from 228,000 in the prior week down to 221,000 this week. This matches, by the way, what we've seen at this time of year in each of the last couple of years. We've seen a little bit of a spike in late June into early July, which really suggests that there's just an issue with the seasonal adjustment factors, and there's not really anything that's going on here. We said that this was something that was possible when we started to see these creeping up maybe a month or so ago, and that this is not really anything to be worried about because it was following a normal seasonal trend. And in fact, that's what we've seen here. The other piece of news that I think is better news on this front, continuing jobless claims did increase by 2,000 from 1.954 million to 1.956, but that's more in line with where we would expect this to be based on prior year numbers. And pretty much what it does then is it takes this from a place where we were starting to get concerned because year over year you were starting to see continuing jobless claims rising by 6, 7, 8% annually. And that's something where as you start to get close to that 10% number, it kind of gets you into a dangerous spot where things tend to ratchet up pretty quickly. Instead, what we have here is a case where now for this week, you're seeing continuing jobless claims rising 4.8% year over year. That's a much more comfortable figure where you can say, yeah, there might be, some more jobless claims, but it's not happening at a pace where it's overly concerning to us. It's just 1 week of this data, so obviously we need to see more and see how things evolve from here. But I do think it's a positive sign on this front, at least, that one of the things that we were concerned about, those continuing jobless claims moving up at a faster pace, at least for now, seems to have abated somewhat, and we'll have to see where things go, in the coming weeks. But things are looking better on this front than they were 4 to 6 weeks ago when we were starting to get concerned. So I think that that's really good news there.
What I like about it too, Chuck, is it seems to, again, you wait for more data and you see what the trend plays out, but this report seems to confirm the kind of big narrative around the labor market right now, which is employers are holding on to employees. They're not hiring terribly quickly, but they're also not firing terribly quickly. If you don't have a job, it's relatively tough to find a new one, but we're not seeing a big deterioration in the state of the labor market, and that's what we got out of the monthly jobs report where the unemployment rate dropped. That's what we've been seeing from the JOLTS report, and all this data is actually not horribly contradictory for once, which is nice.
Let's talk a little bit about the retail sales data, because this one, this is the only one where I think I have a little bit of a different view on this, even though this was the one that, was being trumpeted initially, because retail sales came in with 0.6% month-over-month growth compared to expectations of 0.1%. Even stripping out autos, you came in at 0.5% compared to 0.3% expected. And so the immediate read is, we're back, baby. Like, that's what you see here. The contrarian view that I will take on this is that when we look at core goods prices, they rose by 0.6% for the month. And so all this is telling you, because retail sales do not adjust nominally, is that stripping out autos, you actually saw real goods spending decline slightly for the month. People were just spending more in order to keep up with price increases. So that's my contrarian take on it. The good news is that people are at least still buying basically in the same quantities. The bad news, it's not a real increase in people buying more stuff. It's just the price increases that are passing through. So that's my contrarian take is this report's fine because it doesn't show degradation the way that the last couple months did. The tariff front-loading was real, and then the last couple months were people buying less stuff because they had bought a bunch back in February and March. But this is not a meaningful, real improvement because prices went up by the same amount, or actually by a little bit more than what we saw for retail sales ex-autos.
Got it. So basically, the consumer hasn't deteriorated significantly, but they are not
treading
getting
water.
More stuff, treading
water.
And
the other piece that I'll point out, and this was not me who grabbed this. This is from Neil Dutta from Renaissance Macro. I'll read his quote here. Looking through some of the details, furniture and home furnishing and electronics and appliance stores saw sales decline 0.07%, about flat. However, CPI for household furnishing and supplies rose 1%. Thus, it's safe to assume that real spending in this category fell. Similarly, recreation commodities CPI rose 0.8% for the month, while sales at sporting goods, hobby, book, and music stores went up by just 0.2%.
The contrast is clothing and accessory stores saw sales rise 0.9%, while apparel CPI rose 0.4%, indicating growth in real spending on clothes. So basically, what Dutta points out is, hey, in the areas where you saw big price increases in CPI, you actually saw some pretty bad numbers in this retail sales report. Can you draw a straight line for 1 month? Not really, because it's 1 month and like all kinds of weird stuff can happen. Like 3 people in New York City don't buy cellos and music stores go down. I don't know, but I don't know. It's something, you know, like we need to see a broader trend, I think, in order to make something of some of this. But overall, my take on the retail data is it's fine. Like it's not showing what we saw for the last 2 months, which is good. But it's not this huge improvement because the prices for a lot of this stuff went up as well, as we saw in CPI earlier this week.
Right.
The other 2 reports, I think you can say pretty much nothing but, you know, good news aside from that prices paid component of Philly Fed. But overall, the story continues to be the same in the U.S. economy. To this point, we really haven't seen any huge shift in trajectory because of tariffs, positive or negative. It's basically things are moving, and until proven otherwise, that's kind of where we are. Let's take a quick break here. When we come back, this should be a fun one. It's titled "The Bond Market Won't Let America Be Irresponsible Forever." We'll see about that.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI and Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI and Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, we've got a piece here in Bloomberg Opinion. It's titled, "The Bond Market Won't Let America Be Irresponsible Forever." And America's saying, hey, you can't tell us what to do.
Hold my beer.
Watch. And I do think that the subheadline actually gets at some of this. It says, the national debt is rising and interest rates will follow eventually. And this gets at something that we've talked about an awful lot, which is, I remember if we, go back in time. Tucker, can you cue up the time machine for me for a minute?
Stand by.
Okay. We're just getting the flux capacitor moving. But I remember back in the fall of 2023, the birds are chirping, the leaves are falling, and interest rates are rising. 10-year Treasury went from 3.7% up to 4.997. It rose 1.25% in the span of 2 months at the end of 2023. And everyone and their grandmother's going, oh boy, the national debt's too high. You got to do something about the debt or rates are going to go higher. And Congress responded by doing absolutely nothing about the debt, which means that rates went, oh, this is interesting. 2 months later, by the end of 2023, that's right, just 2 short months later, the interest rate on the 10-year Treasury went from 4.997% to 3.785. It reversed the entire move in a span of 2 months. Mike, did anything happen in those last 2 months where the U.S. decided, hey, you know what? We're going to put on our adult pants today and we're going to go and deal with the national debt?
Yeah, we raised taxes, cut benefits. No, of course not.
No, we didn't. We did nothing of that sort. And so this is why I always say it's important not to ascribe short-term, market fluctuations to long-term forces. Is there the possibility that higher U.S. deficits lead to higher interest rates? Yes, period. Is it also true that over short time periods, be it a week, a month, or even a year, the bond market can move in ways that have nothing to do with the long-term deficit trajectory as well? Yes, period. Any other thoughts?
I guess 2 other ones. One, her article ascribes a lot of the inflation. I'll quote Allison from this article, actually. Culmination of this era was the pandemic and its aftermath, when the U.S. and other countries issued an unthinkable amount of peacetime debt. Finally, markets responded. It turns out there was a limit to how indebted a country could be. Inflation took off. Interest rates went up too. I think she's misascribing things a little bit here. Did the run-up of deficits and the amount of government spending globally contribute to higher interest rates and higher inflation? Yes. Was that the only thing that caused higher inflation? Probably not. We also shut down large parts of the world and had a tough time restarting them. The other big piece that I would say here is, you talk about long periods of time where bond markets can do weird things. I'll say furthermore that you can have long periods of time where governments can do really dumb things without much of a reaction. See the last 25 years of our nation's attitude towards government debt. And quite honestly, things haven't gotten too bad. And so it's important to keep that context. I think we need a reminder of this every once in a while, that, yeah, we can't just get away with being horribly fiscally irresponsible forever. but it's also...
But we can do it for a while.
An entire quarter century where there's been very little in the way of repercussions.
Summer's here in New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange. Just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little bit of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Mike, I'm trying to reconcile what we've seen the last 2 days now in the semiconductor space, because yesterday, ASML, who manufactures, they're the company that makes the machines that make semiconductors, is the simplest way to describe it. They make these lithography machines that help companies like Taiwan Semiconductor and Intel actually fabricate chips. And so ASML comes out yesterday and says, hey, we had a good quarter, things look good, bookings are good right now, but we're not really sure if we're going to see growth in 2026. We hope to, but we can't comment on that yet, which was kind of a big deal, which is why their stock fell like 10% yesterday. Today, Taiwan Semiconductor comes out, and I'll just quote here from the Wall Street Journal. Taiwan Semiconductor Manufacturing is accelerating its expansion in Arizona to meet soaring U.S. demand from clients in artificial intelligence and high-performance computing. They also reported broader earnings that were really quite strong, which is why if you look at Taiwan Semiconductor today, they're up about 3%. And so I'm trying to reconcile this between the company that makes the machines for Taiwan Semi is saying, yeah, we're not quite sure if there's going to be growth in 26, and Taiwan Semi's like, hey, we got all kinds of growth here.
We got nothing but growth in 2026. Yeah, it is tough for me to reconcile as well. I mean, I suppose hypothetically, ASML might be saying something about their ability to distribute their machines to other countries like China that isn't there and was in the past and might not be able to make as big a piece of their business. They could also just be overly conservative in their view on how trade wars could interrupt business. Because I'm with you. I mean,
sure.
For folks that don't know, not only are they the supplier to Taiwan Semi of lithography machines, they are the only one in the world that does this.
Right, no one else does it. And they source stuff. Basically, their thing that they do, they coordinate a ton of imports to build these machines. They build them very precisely, and then they send them very precisely without them breaking while they're on boats and planes and stuff like that. It's kind of a unique skill set. Let's take a quick break. Hour 2 is coming up in just a little bit.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and Your Financial Plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we got stocks staging a modest rally that's predominantly driven by tech at this point. Remind me, or let me know if you've heard that story before. Right now, taking a look at your broad indices, you got the Dow up 65 points, the S&P's up 22, NASDAQ up 149, so anywhere from about 0.25% to a 0.75% rally taking place across U.S. equity markets right now. Bonds, not with a ton of movement, but a little bit of movement towards lower yields, with the 10-year Treasury down 1.6 basis points to 4.439%. We've got oil today up 53 cents a barrel, and that puts West Texas Intermediate at 66.91 a barrel. And we've got gold today moving back down a bit after rallying yesterday, off $19.10 an ounce to $33.40 even. Gold has been in a pretty darn tight range over the last 3 months now, I'll say. I mean, basically since mid-April, it's been anywhere between about 2,900 and actually, no, sorry, that was the wrong number that I was just looking at. Gold, it still is a tight range, but just I was not looking at the right chart. Been in a tight range between about 3,200 on the low end and about 3,470 on the high end. So not much movement in either direction, just kind of coiling up at this point, waiting for what comes next. Obviously, yesterday we saw quite a bit of movements in markets throughout the morning as the will Trump fire Jerome Powell or will Trump not fire Jerome Powell battle played out in the 11 o'clock hour. To this point, I haven't seen anything today. It was kind of put to bed yesterday, but I continue to think, Mike, there are two possibilities here, in my opinion. Either this is going to happen in the near future or it's not happening at all. And the reason that I say that is the stuff that you're seeing right now just from, kind of a why are these stories being published now perspective is either you're publishing them because you want to do something or you're just publishing them to make life as miserable for Jay Powell as possible in the hope that he resigns and you're not going to do anything. You wouldn't start publishing all these stories now and then 6 months from now, 2 months before he's going to move on, be like, well, let's fire him now.
Right.
I mean, personally, I kind of look at it and I'm like, it's only another 9 months anyways.
Just suck it up, deal with it.
It's like another 6 Fed meetings.
You're going to outlive him.
Right. You're going to be there and he won't either way. So,
yeah.
I don't know. We'll see where this goes, but yesterday was interesting.
The other, just to stay on this for a moment, the other piece of this that I feel like is also being ignored is the architecture, I guess, of how the Federal Reserve actually governs.
You mean Jay Powell doesn't just set the interest rates
Yeah, he's
himself?
not the interest rate god, and I feel like everything's ignoring that. And
we need to have T-shirts made, Mike.
It's Jay Powell is not the interest rate
no,
god.
just interest rate god. That's all I wanted to say.
There are a number of voting members out there, and this hasn't gotten a whole lot of talk about, but if the president did end up removing Jay Powell, I'm still unsure that he would get the outcome that he would want because there are a bunch of voting members on the Fed who would say, look out, our independence is being threatened. We have to do the exact opposite of what the president wants now.
Which then raises the question, okay, does he try to find ways to get rid of all of them?
Right, yeah, maybe. But it is a really messy process here, and I think that fact is pretty important. And it's also why I tend to think that this is going to blow over because smart people are going to realize that even if we chop off the head, they're still not going to do what the president wants, in all likelihood.
I think you're right. The most likely outcome is that nothing happens.
Yeah.
But the probability that something happens here, while
it's
still,
not zero. Yeah.
While still low,
yeah,
is not zero, and zero's where it's been the entire time I've been alive.
Yeah. Yep.
So
that's
different.
It's worth talking about.
So that's different.
Yep.
Let's talk about this piece from Bloomberg Opinion because this is a meaty one with a few different routes we can go down. Pump prices aren't the problem for Americans. Plug prices are. And
sure aren't. Gas prices sitting at $3.16 a gallon nationally.
It's basically been
New
the
England,
same place all year.
Lower, gas prices are cheap.
No, I won't go so far as cheap, but they're
calling
fine.
them cheap.
You're calling them cheap.
Yeah.
Oh,
hit it first.
Mike Armstrong calling gas prices.
I'm paying in the twos for
cheap.
gas. It's cheap.
Okay, there you go. Now, the electricity side of things, this is kind of wild. So what you're seeing here, a bunch of different utilities have come out this year, and basically either for electricity or for nat gas prices for heat have pushed through huge price increases throughout the country. We're talking, 20% plus in terms of the price increases. Nationally, because of how electricity prices are calculated in CPI, it's not moving up that much right now. Year over year, electricity prices up 5.8% in CPI. That's going to continue to rise. It's going to end up moving faster here. But the couple things that you are seeing on this that are driving this, I don't think we have great answers for. And so let's start with
But we know the culprits.
Hang on. There's two things afoot here. So the first one is kind of unexpected because we've talked about how oil prices and gas prices are in a pretty good spot. They haven't really budged very much. Nat gas prices, on the other hand, have budged quite a bit. Closing price yesterday for the continuous contract on the Chicago Mercantile Exchange was at $3.56 per million BTUs or whatever the heck it is. At this time last year, we were heading towards $1.86 per million BTUs. So nat gas prices have doubled in the last year. Nat gas makes up generally, depending on, the statistics that you look at, anywhere from like 30 to 40% of our electricity production nationally, but it can vary quite a bit regionally. So you've got nat gas prices going up, and the reason why nat gas prices are going up is largely due to the fact that you have new drilling in the U.S. that is slowing down at this point. And the reason why it's slowing down is because oil prices, as we talked about, are in a pretty good spot. And oil companies are not going to go out and risk, overproduction given what happened to them in the 2010s. And the reason why this matters is that by and large, if you look at the largest countries for nat gas production, the United States puts out 967,300 million cubic meters of gas per year.
That much?
Yes. I'm told that's a lot. And the reason I'm told that's a lot, Russia is a distant second behind by about 30%. The next closest country is Iran at about a quarter of U.S. production. So the United States produces, when you actually do the numbers out, it's freaking huge. It's like almost half of worldwide nat gas production. I'm sorry, almost a third of worldwide nat gas production. So it's huge. And the reason why is because we frack a lot of our oil, and nat gas is a byproduct of the fracking process in most cases. And so because of that, we get a ton of it, whereas Saudi Arabia, who produces a lot of oil, only produces about 12% of the nat gas that we do because they do through more conventional deposits and methods. So if you have less new production coming online in the United States, most nat gas production comes from those early stages of fracking, and so you don't have as much nat gas being produced. And so this means that nat gas prices move up even as oil prices stay flattish. So you've got a problem on the supply side there. The other piece, and this is going to be really interesting to see how it plays out in the next couple of years, in my opinion. Is this what you were going to say, Mike? The data centers for AI?
Yeah.
So everyone's all on this AI train right now. Like, ChatGPT gives me life guidance and this and that, and it helps me be friends. And now Elon has, chatbots that help me feel fulfilled in life and this and that, and it's great. It's fine. Whatever. But man, the amount of electricity that these data centers need is astronomical. And I'm just curious how we're all going to feel as we continue to see our electricity prices going up because of more and more data centers being constructed. And I know how we're going to feel. We're going to feel bad about it. And this is going to become the next hot button issue for state politicians is, hey, we want to enable, AI to operate in our state because it gives us a ton of investment into our state, not so much in jobs, but in, money flowing in for construction and things like that, once the construction's done, you don't need many jobs to run the AI data center. But man, this is causing some headaches for me as far as, all of my constituents, their utility prices are roofing.
Yeah. I don't know if we already see this, but we're going to start to see proposals of corporate versus household electricity rates. Kind of like you do with, tax rates on buildings in cities. I think that's probably going to be a solution there. I
bet we'll be good at doing that.
Oh yeah, we're gonna be terrible at it. Government setting electricity rates. Good luck.
That's good. It's going to be good.
It's going to be pretty bad. But this is the reality. The price increases from demand. The price increases from all the deferred maintenance on all of these things that you need to get updated so that we can have those centers. It's this massive investment, and the one thing I know about electricity supply is it doesn't appear overnight.
It takes decades. We're so slow with reviews on grid. I have a buddy who works in developing new electricity projects. I'm like, how long does it take start to finish to do it? He's like, 10 years.
Mm-hmm.
You got to get approval on the project, then you got to get approval on the interconnection, then you got to go through it. He's like, it's a 10-year process to get any new power to the grid. And that's in a good scenario. So this is going to be a flashpoint because housing's already struggling because of rising insurance cost, you've got high interest rates, you got all this stuff that's already there, and now you throw in utility rates that are rising rapidly on top of it. It's not great, Bob. Let's take a quick break. When we come back, let's do a little bit of trivia, and then we'll talk the job market for new college grads.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is having a profound effect on daily business. Its reach and result is significant and will likely only continue to grow, and that may present an incredible opportunity to include in a financial plan for the future. Hi, this is Chuck Zodda from the Armstrong Advisory Group. AI's technologies could be described as groundbreaking, and that's why we've written a new guide this month called AI in Your Financial Plan. Understanding how AI works may offer you insight and information about how to craft a plan that you haven't yet thought of, but it's not without risk. Call the Armstrong Advisory Group right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001. You can also request this guide online by visiting armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And in case you didn't hear it, Coca-Cola will soon return to using real cane sugar in its U.S. products after decades of relying on high fructose corn syrup. The top corn-producing state in the U.S. could be hit pretty hard by this shift. So, trivia question today. What is the top corn-producing state in the U.S.? Once again, what is the top corn-producing state in the U.S.? Be the seventh person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we had a piece in Bloomberg. It's titled "What the Tough Job Market for New College Grads Says About the Economy," and it's kind of something we've been talking about for a while now. Which is, look, if you've got a job, we're not really seeing any problems from a layoff perspective. You're pretty safe at this point generally. But if you don't have a job, companies are hiring at a pretty low rate that was last seen during an economy with closer to 6% unemployment. And it's not surprising that unemployment for people in their early 20s is running hotter than the broader economy right now because they're not coming from a job already. They're coming into the workforce and not able to find jobs as readily.
Yeah, the point that's made in this article, citing a bunch of data from the federal government, is that the employment situation for young college grads looks a lot like it did in the second half, probably early second half of the 2010s.
2015 area, yeah.
Yeah, it just, when you look at unemployment rate, hiring rate, all those things, the data's coming in that type of environment. What they pointed out that I hadn't really seen much analysis on yet, though, was the dispersion, I guess, of those jobs. And the point is made that the unemployment rate is so low and the demand for labor so high in the healthcare industry that, if you have a job in computer science or financial services, you might look a lot worse off than somebody did in 2015. It's just that the hiring rate is so high in things like medical care, adult care, the aging boomer population, and all the demand for healthcare needs that are there. That's where a lot of these jobs are going and keeping that overall unemployment rate low, which I would buy. What I didn't buy was a story we covered a couple days ago that some company that I'd never heard of did a survey that basically found the portion of college grads who couldn't find a job in their field was something like double what millennials experienced. And one, I had never heard of the surveyor, and two, that just doesn't really coincide with any other data we have seen. It is tough to find a new job if you're a young college grad, especially a white-collar one, but it's not Great Recession hard.
Yeah, I mean, do you think that might have been just comparing millennials over like a 15-year period because not all millennials graduated in 2009?
Yeah, I mean,
maybe that's what it's doing.
That could be, but it was a tough one for me to buy into when I read that study.
What generation comes after Gen Z? What's the next one?
Ooh, I don't know.
I mean, these are all like artificial construct anyways. Okay, here we go. This is from Wikipedia, so take it for what it's worth. Yeah, it says Generation Alpha. I think we've gotten a little lame on these names, quite honestly.
Yeah.
Why does it have to be like a letter? Like the old generations had cool names. Hey, we were the baby boomers.
Well, even ours was a good name.
The
right?
millennials,
Yeah.
exactly. It's. I do like.
I like ones that mark an occasion. Can we name a generation after the first American Pope?
What would we
is
call
that
this?
getting too controversial?
Probably. I think. I mean, look, anyone listening from Chicago would be like, line it up, let's do it. But
all the Chicago Catholics are all about this idea.
I'll tell you this: everyone that I know from the Chicago area
is making connections to
claims
the
they know the Pope. Every
I saw him in an
single
ice cream shop in 1963.
No. Beyond that, it's like, yeah, we used to have dinner with his family. Like, no, you didn't.
Good guy. That Pope, let me tell you.
But at least Gen Z, the alternative name that I have heard people say is Zoomers, because it kind of coincides with people starting to use Zoom. I get that. And maybe Gen Alpha, it's just too early to name them because the earliest ones were only born 12 years ago, and we're still in the midst of them being born, so we don't know what like the defining characteristic of their generation is yet.
Let's do this. If you have a good idea for better than Gen Alpha for this youngest generation of children to mark an event in American
These are
history,
people born since 2013.
617-362-1385 is the text line. So we're looking for some ideas. My idea is to come up with something creative to do with our new Pope, even though I'm not Catholic, but we can divert from that if need be.
What about, instead of Generation Alpha, Generation AI? Does it have to have the word generation in there, though? Like, baby boomers didn't,
No.
millennials didn't.
Not at all.
You know?
Zoomers doesn't, so no, I don't think it does.
Something about, like, robots and AI. I got to workshop it during the break. Let's take a quick break here. When we come back, we've got the trivia answer and Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory with a modest tech rally occurring after yesterday's choppy ride due to uncertainty around the potential firing of Fed Chairman Jerome Powell. Traders also digesting a new batch of second quarter earnings in addition to better than expected June retail sales data. Right now, the Dow is up by 1/3% or 148 points. S&P 500 is up nearly 0.4% or 24 points. NASDAQ is up nearly 0.7% or 139 points. Russell 2000 is up nearly 0.9%, 19 points higher. 10-year Treasury yield down 1 basis point at 4.44%, and crude oil is up just over 1% higher, trading just above $67 a barrel. Big news from Uber this morning after the ride-hailing company announced a partnership with EV maker Lucid and self-driving tech startup Nuro to launch more than 20,000 robo-taxis over the next 6 years. As part of the deal, Uber will invest $300 million in Lucid. Lucid shares are surging 43% at the moment, while Uber stock is off by about 0.25%. Meanwhile, shares in high fructose syrup producer Archer Daniels Midland are sinking nearly 3% after President Trump yesterday announced that he had persuaded Coca-Cola to use real cane sugar in its drinks in the U.S. Coke stock is up nearly 1%. Sticking with the beverage space, where Pepsi posted better than expected second quarter earnings and revenue this morning, despite weaker demand for its food and drinks in North America. Pepsi also reiterated its full-year outlook, sending that stock up 6% higher. Elsewhere, GE Aerospace raised its annual earnings outlook after the aircraft engine maker posted sales and profit that beat expectations. That stock is off modestly. United Airlines posted better than expected quarterly earnings, but its annual outlook did disappoint. Shares, however, are up over 3% now. And after today's close, all eyes will turn to Netflix, who will post their second quarter results. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the question, what is the top corn-producing state in the U.S.? That would be Iowa. Matt in East Boston is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Chuck, we got a text from Sean earlier during the show. It unfortunately does not have to do with a new name for the Gen Alpha. It has to do with the Fed.
Did we get any text on that, Tucker?
I'll look.
He'll get back to us. But Sean asked a good question. In particular, when we talk about the Fed, they're in this pause mode because of the threat of tariffs. And I think in some ways that gets a bit miscategorized, because my own views on, if we do end up in a very high tariff environment, higher than the 10 to 15% that's now being talked about, is I'm less concerned about the price increases that will be incurred and more concerned about recession, because you're likely to have reciprocation and retaliation by other countries, and we potentially end up in a trade war. And a trade war to me doesn't seem like a very high inflation environment. It seems like a pretty low growth environment, which the Fed eventually cuts into. But the question that Sean's asking here is, why is the Fed pausing? Shouldn't there be, isn't there some pretty fair certainty like Scott Besson has talked about where, yeah, you get tariffs, you get a one-time price increase, but it doesn't actually affect things, 6-12 months down the road in terms of prices. You just see those tariffs go into place. There's a one-time increase in terms of pricing, and then boom, you're done. Why wouldn't rates still move lower? And I'm interested in your answer to that question too, Chuck, but my personal view would be the Fed's point about all this is about the uncertainty around tariffs rather than the idea of tariffs themselves.
I agree, and especially when we have threatened additional tariffs that could come into play 2 weeks from today or 2 weeks from tomorrow. That's something that you need to be aware of, because if you have a sequence of tariffs that come online over time, that's not necessarily a one-time price adjustment. It's a series of one-time, which is, multiple ones that can continue. The other piece, in talking about this, if, about a month and a half ago, I had started to say, look, if it weren't for tariffs, you can probably make the case that maybe the Fed should be cutting right now. And the reason why I said that, and I probably said it on a few different shows, was, hey, you've got a labor market that's starting to show some signs of struggling. You've got, continuing claims that are ratcheting up a little bit. You've got a housing market that's struggling. And, you've got signs from all these different, surveys and this and that things aren't great. Yeah, you could probably make a convincing case to start cutting rates now. The data over the last few weeks has evolved to the point where you kind of look at it and you go, the continuing claims issue appears to be mitigated, at least, for now. We'll have to see how it evolves, but it doesn't seem like it's really a thing. And housing continues to be quite bad. Like, let's make no bones about it. There's some real problems in the housing industry that could become a bigger drag on the economy in the second half of the year, so I still think that that's real. A lot of the survey stuff has started to bounce back and look better there. So I think most of the time, quite honestly, and we've seen this from the Fed a couple times in the last few years, most of the time the Fed is best served by doing nothing. When inflation, do you remember back in Q1 of last year when we got some high inflation numbers and people were like, hey, maybe the Fed needs to be raising rates again because inflation's coming back? And Jay Powell came out and explicitly said, we are going to look through this because we don't think there's any meat on that bone. That dog won't hunt. And they were right.
Yep.
And the year before, in late 23, people were starting to bark a little bit about the labor market. And Powell didn't explicitly say anything, but the Fed didn't cut in late 23. They basically were just like, no, this is fine. We don't need to do anything right now. The only time that they have done anything, remember, the late third, early fourth quarter of last year, they did cut interest rates by a total of 100 basis points. And ultimately, I think that's been proven to be the right move, just because inflation has not, it did not bounce back in the first half of this year. And I think you can point to the labor market and housing and say, yeah, like you probably needed, a little bit of help on that front there, even if it didn't move long-term rates very much. But this is why when I look at the whole talk about the Fed, you can point very easily to late 21, all of 22, and the first half of 23 and be like, yeah, they did a poor job then. But in the last 2 years, like if you're looking at it, if you want to tell me Jay Powell's done a bad job in the last 2 years, like since the middle of 23, I want you to point to the specific decisions he made and tell me why you think he did a bad job then.
Yeah.
Because I really struggle in that time period to be like, there was a big mistake there. I don't see it in my personal opinion.
Interest rates obviously seep their way into every aspect of most people's financial lives. There are very few of us that don't save, don't borrow anything, and just live life without being affected by interest rates, whether it's your credit card, whether it's your home loan, your car loan, or the rate that you're getting on your savings account. All of these things come into play when it comes to retirement and your financial plan. And I can't tell how tell you how often, I have a lot of confusion from people about, okay, what do I attack first, right? Do I need my rainy day first? Do I need my rainy day fund first? Do I pay off a credit card, pay off an auto loan? What should I do with money that's in my retirement account? How aggressively do I pay things down ahead of retirement? These are common questions. People worry about debt a lot, especially right ahead of retirement. And if you have those questions too, please call the folks at Armstrong Advisory Group and let us put some form of cohesive and coherent plan around your debt to help you manage through it and get to that retirement point. The number again for the Armstrong Advisory Group is 800-393-4001. Again, Armstrong Advisory Group. You can give us a call at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to I wanted to talk about Netflix earnings, but honestly, what's there to say about Netflix at this point? They keep being the only media company to figure out ways to print money left and right.
Yeah, the main thing that I'm interested in is how good at advertising are they getting? It was a new trade to them. They had to build it in-house. Are you any good at it? How well are you monetizing it?
Honestly,
my guess is probably.
They're probably pretty good at it, and I don't even really care. Like all they keep doing. This is a company whose revenue in the last 10 years went from $6 billion to $40 billion. Their net income in the last 10 years went from $162 million to $9 billion. Their free cash flow in the last 10 years went from negative $700 million to $7.4 billion. Positive. Like, what can you look at with this company and have honest questions about?
How are you going to continue to grow it is the only honest question.
There's this article in Bloomberg. Netflix is at risk of earnings letdown after $250 billion rally.
But it was after a $250 billion rally.
Right, like that's like being like, hey, Amazon's at risk of slowing sales growth after growing their sales to $400 billion. Well, okay, there's only so much money to go around. You know, like I just don't look at this. And look, how the stock performs can be very different from how the company does. Because obviously, you know, expectations are a big thing. But I don't know, how many questions has this company answered to the positive in the last 20 years?
Most of them.
Like, I'll make a case every single one. And even the ones where like they've been like, oh, we made a mistake, they realize it really quickly.
Yeah.
Look no further than Quickster. You remember that? That was the spinoff they were going to do for their DVD business. And finally they were just like, no, this is dumb. We're just going to kill it. So let's take a quick break. When we return, Paul LaMonica from Barron's joins us after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now, 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
As promised, we're now joined by Paul LaMonica from Barron's. Paul, how you doing today?
I'm good, thanks. How you guys doing?
We're doing well. You got a piece that's out this week. It's titled Tesla Circling 6 Other Stocks to Short, according to J.P. Morgan. I didn't realize J.P. Morgan was in the business of publishing lists of stocks to short. Normally, analyst reports, you typically get just the bullish stuff coming out.
Yeah, it's there's a joke that one of George Carlin's 4 dirty words should be sell, at least on Wall Street. But no, this is a fascinating report. There were 40 companies overall that J.P. Morgan highlighted. I chose 8 of that 40 to look at, and Tesla jumped out as one because obviously it's a very polarizing stock. A lot of people love Elon Musk, a lot of people not so much. And the stock is down, more than 20% this year already. So you could argue why short something that's already fallen this much. But their EV analyst, he noted that the stock still has what he called a sky high valuation. It's at 175 times or so, earnings estimates for this year. You've got the possibility of more earnings declines because of reduced EV subsidies, which could hurt Rivian as well, which was another stock that they said to short, and that they also think that the robotaxi initiative that has been widely touted is likely to disappoint. So all those things potentially could be a drag on the stock. And the analysts at JP Morgan didn't even get into the well-publicized spat with the president as well, which might be another issue that could hurt Tesla.
What about Circle? They're kind of a new entry to the market. Not kind of, they are a very new entry. I think they've only been publicly traded for maybe 6 weeks or so, but they're up about
since June, yeah.
They're up about 180% since they IPO'd. What do the analysts have to say about the company that makes dollars in stablecoin form?
Stablecoins, yeah, USDC. Yeah, this one's a really interesting one because Circle, one of the lead underwriters was JP Morgan, and usually underwriters come out after a company goes public and they're kind of very glowingly bullish, but that's not the case here. But what's interesting is it just goes to show that even when a company like JP Morgan is going to bring a firm like Circle public, you have to be cognizant of price and valuation. So the analyst, noted, and his quote is, Circle is a market leader in stablecoins with amazing technology. So it's not that they think that it's a bad company, but there's more competition. And they said the current valuation is excessive. So, you got to give credit to JP Morgan for this particular analyst for, taking a shot at the company's valuation after it's gone up like 500% or so from the IPO price.
Any other ones particularly stand out to you?
Yeah, some of the ones that stood out, Snapchat and Bumble, two social media companies, Bumble, a dating app, they've fallen this year, but, they see more downside there. Intel, which has rebounded a bit, but still has a lot of concerns about where that company is going to be going forward. AMD kind of really emerged as a tough competitor in the PC server business. But then, of course, NVIDIA and everything that $4 trillion company has done with AI chips. And then two that I thought were interesting, too, were Shake Shack and Cheesecake Factory, two consumer restaurant stocks that have done well this year. But the analysts there, one of the analysts who follows Shake Shack, said they were concerned about all the marketing that needs to be done to support same-store sales growth and traffic growth, and that Cheesecake Factory, it's just maybe a little too richly valued, like some of the food that they serve as well.
Fantastic. Paul, appreciate you joining us today, and hope you have a great rest of the week.
Thank you very much. Appreciate it. Talk to you guys in a couple of weeks.
That is Paul LaMonica from Barron's. Mike, anything that you want to touch on?
I do. Billy McFarland, the founder of Fire Festival, has sold the rights on eBay for a whopping $245,000.
On eBay?
On eBay, he sold the rights to the Fire Festival. The proceeds will be going towards restitution. Unfortunately, he owes $26 million, so it's not going to make a huge dent. I did ask ChatGPT, though, to create me 5 new ideas of frauds that Billy McFarland could go and invent, and it gave me a warning about conducting fraud and then did it anyway. The one that I like best is NF Tap Water, the first blockchain-certified luxury water brand. Each sip is tracked on the Ethereum network to prove you drank it. Water is sold in invisible biodegradable bottles, i.e. you just get tap water. Liquid authenticity is the slogan, and Ashton Kutcher invests for some reason.
Interesting.
So thank you, ChatGPT.
He sold it on eBay?
He sold it on eBay.
You couldn't get, Sotheby's interested in, selling the thing?
Not at that price, and not with that background.
I got to spend more time on eBay, I guess. Let's take a break for the rest of the day. We're back at it tomorrow to finish up the week. Bunch more economic data coming. We'll have all of it for you then.